I'm licking my lips at the opportunity. That's my take on the current market. I see this as an enormous gift to long-term investors. I think you framed it exactly right. We have all these short-term liquidity-driven negatives. We have the Mt. Gox distribution. We have the German government with $3 billion of Bitcoin. We have the US government with $12 billion of Bitcoin, all moving to dump it on the market, which is driving the price down, and in classic crypto fashion, occurring on a low liquidity week, and therefore, blowing out futures positions, leading to cascading liquidations and so on and so forth. But all of these things are short-term non-recurring events, right? Mt. Gox is always going to send out its Bitcoin once. The Silk Road Bitcoin is only going to be sold by the US government once. Against these short-term non-recurring events, we have these long-term massive catalysts. We have the ETFs, which are going to vacuum up assets for the next decade. We have institutions starting to embrace Bitcoin. We have Washington changing its tune from caustically anti-crypto to at least neutral and potentially very pro-crypto. I think as soon as we work through these negatives short-term, we're going to have a historical bull market run. And I'm really excited for the second half of the year. We just have to suffer through this little period because that's the way crypto works. But these will pass and the long-term trends are very intact. And I think it's pretty clear we're going to blow past all-time highs and blow past, the $100,000 level, which are the two behavioral cliffs that are up next, at which point people may sell. And then it's hard for me to imagine Bitcoin stopping until it gets to this $250,000 level.
Whilst amateurs and investors who are new to the crypto space are freaking out and selling in reaction to the latest crash in crypto prices, smart money and sophisticated investors are licking their lips and buying up as much as they can. That's what I was told by Matt Hougan, Chief Investment Officer at Bitwise, in my latest interview with him. If you want to check out the full interview, it's the first link in the description below, posted on the Crypto Nutshell. Within the interview, Matt Hougan breaks down the latest crypto market crash, why investors should be buying, and finally why he believes institutions will push Bitcoin's price to $250,000 per coin this cycle. If you don't know who Bitwise are, they are the 5th largest Bitcoin ETF issuer with over $2 billion of Bitcoin held right now. Matt Hougan is their Chief Investment Officer, so when it comes to crypto and institutions, Matt knows better than anyone. If you want to watch the full interview, hit that first link in the description. But without further ado, let's jump in with Matt Hougan.
We looked at, the early flows in these Bitcoin ETFs, and if you extrapolate outwards, it's pretty easy to get to that kind of number. And maybe even easier than it looks because these ETFs are so great. Our ETF only charges 20 basis points, which is half the price of the largest gold ETF. It's an incredible deal. And other providers are in that zone as well. So these are great products. So I think it's easy to get to that number. The how that translates into price, there's sort of an art and a science to it, maybe more art than science. I think if you look at the price returns of Bitcoin and how it trades over time, what you see is, at least how it trades since the ETF launched, you see, net ETF flows gobbling up more than 100% of all the Bitcoin mined. So the ETFs have to buy Bitcoin from people who already want to sell. And you can look at, sort of how old the coins are and where people have been comfortable selling historically. And I think it's pretty clear we're going to blow past all-time highs and blow past, the $100,000 level, which are the two behavioral cliffs that are up next, at which point people may sell. And then it's hard for me to imagine Bitcoin stopping until it gets to this $250,000 level before there's another behavioral wall. I'd also note that, if you ascribe to the 4-year cycle history of Bitcoin, it's a pretty reasonable proxy to assume you get to something like 3 or 4x the past year's price. And I don't know, you have to sort of assume that the past is not, or the future is not going to look anything like the past to assume we won't get to these levels. So we can see it to get to 250K. It could get higher, it could get a little lower. As an investor, I wouldn't pick one particular number, but you have to do that as a pundit. That seems like a reasonable level. And I think we'll get there. There are 3 really big groups right now. So there's retail investors is certainly a big part of the market. There are hedge funds who are usually engaging in trading strategies. And then there are long-term, professional, sophisticated institutional investors, which might be family offices or financial advisors or institutions. I would say in the first days, maybe in the first months, those first two groups were the biggest people. They moved the fastest. Hedge funds can just decide to invest and they invest tomorrow. Retail investors can decide to invest and they'll invest tomorrow. The long-term professional investors, they take longer. They do a due diligence process, they compare competing products, they talk to their clients, and there's a process. So it's a long-winded way of saying out of the gate, I think retail and hedge funds were the biggest drivers, and that's a little bit what you see in the data. But over the last few months, we've seen a significant acceleration in this other group of long-term buy and hold institutional investors as they complete their due diligence process. And I think going forward, that's going to be the biggest group. The reason I think we'll see, more inflows next year than we see this year is because that group just gains momentum and grows and grows and grows. So first these two groups, but the long-term institutions are coming, and they're coming in an accelerating rate.
I wanted to ask you, generally, in the entire scope of ETFs, how do capital flows generally play out? A lot of them fast out the gate, and then do they sort of plateau off over time, or is it just slow building, this constant demand coming?
Yeah, it's actually the opposite. They're really slow out of the gate. So it's really hard to get an ETF to be $10 million, to be $100 million. The vast majority of ETFs end their first year with less than $50 million in assets. Small ETFs are challenging for institutions to buy because they're not liquid and they're not well established. So to give you an analogy, if you look at the gold ETFs, right, the gold bullion ETFs, which many people compare the Bitcoin ETFs to, they launched in the US in 2004. And they were really successful. Their first year, they had $1.5 billion in flows, and everyone thought this is amazing. But the second year, they had $3.3 billion in flows, and then $4.6 billion, and then $5 billion, and then it peaked at something like $19 billion in year 7. And that's what you really see with most ETFs is it grows year over year over year for like half a decade or a decade before it hits some sort of plateau. They're a slow moving train that accelerates. And I think that will happen in Bitcoin too. We came out of the gate really fast, and we'll be well north of $20 billion this year, maybe 30. I think next year will be even bigger. I think it's going to be the same sort of building staircase in Bitcoin that we've seen in all other ETFs.
I want to reiterate that. You said the gold ETF, which is what most people related to, they had 1 billion in net inflows, and then Bitcoin already in just the first 6 months has had 15 billion. Is that correct?
That is right. Yeah, 1.5 gold in the first year, and we've done about 15. Yep.
Insane. And do you think it's a fair comparison? Is comparing Bitcoin against gold, is that the closest two commodities?
Yeah, I think it's a fair comparison. Many people think of Bitcoin as digital gold or emerging store of value. It's also the case that when gold ETFs launched, they weren't a mainstream asset, and ETFs helped bring them into the mainstream, just like Bitcoin hasn't been a mainstream asset and ETFs are bringing them into the mainstream. So I think it's a reasonable comparison. And, we can talk about why the Bitcoin ETFs have grown so much quicker. I think it has to do with we waited 10 years for them, right? It took a long time to get them. And also the fact that Bitcoin, look, it's just objectively the best performing asset in the world over the last 3, 5, 10, years. So obviously investors are going to want to allocate to it. I don't find it surprising, but the scale of the success is still pretty massive. Again, I'm not worried about these short-term, non-recurring negatives. I'm really focused on the long-term themes. And the thing that's changed more than anything over the last 3 months is the attitude in Washington towards crypto, which again has gone from really caustic to neutral or positive. And I don't think the market has priced that in. So yeah, I think we'll get to $100 billion by the end of 2025. I mean, we might exceed that, given what I'm seeing in the market. I don't think we've ended the 4-year cycle. My reason for that is my view of what drives the 4-year cycle is different from what most people think. Most people think it's driven by the halving. I don't think it has anything to do with the halving. I think it has to do with natural sort of economic drivers If you look at any economy, there are booms and busts, there's growth and recession. What happens is you get a period of growth, and then there's overinvestment, and the market overreaches, and then there's a recession, whether you have to clear out debt or there's too much leverage in the system. That happens in every economy. The reason I think there's been a 4-year cycle in crypto is we have the same thing, but on steroids, because we have multi-1,000% returns. So you get massive returns because you have new technological breakthroughs. Like you had Ethereum, an amazing breakthrough in 2015, catalyzed a huge bull market in 2015, 2016, and 2017. And like any economy going through a massive bull market, you got overinvestment, and so you got scam nonsense in ICOs, and the market had to reset and clear that out. I think if you look at what's happening in crypto, we had a 157% up year last year. I think we're going to have another potentially triple-digit year this year. 2025, if I'm right, could be an enormous bull market. If that happens, we're going to get overinvestment because people are going to get too excited. They're going to chase returns. And so I think there will be a reset. I don't think it won't necessarily be year 4. It could be year 5. It could be year 3. But I think that classic boom and bust is actually what drives this cycle. And it's just amplified because we have such large returns. I do think the ETFs could mitigate it on the edge because I do think it's I think we could have, 10 years of building inflows. But I don't think we've repealed the economic cycle. And so I think we're going to get these really fun times where we overinvest and then really painful times when we reset. And I wish that weren't true. I wish we were on a perpetual bull market. That would be a lot easier for my life. But I don't think that's the case.